ensure that you have both the risk and the return in mind, and both the short term and the long term in mind, what we are paying for each of the securities. So I think it's important to keep that in mind, that you follow a certain discipline in terms of you're not overpaying for assets, for ensuring we don't make big mistakes creating our portfolios.
Hello and welcome to this special series where we talk to fund managers in India. We're talking to Mr. Srinivasan Ramamurthy from HDFC Mutual Fund. Thank you so much, sir, for taking out the time to talk to us. Your style has mostly been focused on equity and, talking about asset allocation. But when you approach your investment style in all the funds that you manage, how do you go about it and how do you kind of evolve it as in when the time, asks you to do it?
Thanks, Aroni, for having me on the show. So, as you mentioned, I think it's my role largely is pertaining to driving the hybrid set of products, and within that, in particular, the equity piece and the asset allocation piece. And and by and large, I think the aspect which kind of separates the hybrid or the asset allocation products from the pure equity kind of products is, of course, that the end outcomes that you have in mind are a little bit different from an investor standpoint. As far as an investor who was kind of looking at pure equity products is concerned, he is clearly the only focus for him is to kind of generate as much wealth that he can for himself, and to that extent, he is a little bit, I would say, indifferent towards the time horizon for which he's investing. But the same does not hold true necessarily for all individuals. I mean, all individuals may not have that kind of all investors may not have that kind of a flexibility. So for individuals, investors for whom it is important to kind of balance out this desire to kind of grow your wealth and at the same time reduce the volatilities along the way. I mean, where the journey also matters and not just the end outcome.
Yeah.
For those kind of investors, it becomes important that we design products and we think about products which can make the journey a little bit smoother for them.
Right.
And that's the whole construct with which we approach this asset allocation. And hence, the idea is, of course, to do both from an asset allocation standpoint and even from a security selection standpoint, ensure that you have both the risk and the return in mind, and both the short term and the long term in mind, while we are kind of investing, creating these products, and of course, creating the portfolios along the way.
Right. You obviously asset allocation that everybody asks you to focus on, and we know the story, India's growth story that we all are believing in, right? But when you see it for the next at least near term or like 5 years, where do you see that growth heading, and along with that, the whole mindset of asset allocation evolving with it, or do you think it will almost remain the same?
No, absolutely. I think we are fairly. As people who have been kind of living, working, and seeing how things are moving along in India, I think we are fairly excited about the way that our economy is moving along, and in the context of even the global uncertainties, I think we've seen that we have kind of stood out in many of the parameters that we track and compare to other markets. But like you said, it's equally important to keep the global backdrop in mind. I mean, while we can keep talking about decoupling, but there are obviously interlinkages between every economy today, and obviously investors are extremely global in their approach. So to that extent, I think, global uncertainties do play a very important role in terms of how you think about the next few years, and how you kind of go through the investment journey. And which is why I think it becomes even more important that in an uncertain world that we are currently kind of dealing with, it becomes important that the risks are adequately factored into the minds of the investors in terms of what their expectations should be, and when we are constructing portfolios, to ensure that the risks are adequately kind of thought through, and that can only happen when we have a more holistic perspective about asset allocation and what we are what we are paying for each of the asset classes, what we are paying for each of the securities. So I think it's important to keep that in mind, that you follow a certain discipline in terms of you're not overpaying for assets, because invariably the risks tend to kind of become a lot more they tend to hurt you a lot more when you have kind of mistimed, or you have overpaid for acquiring assets. So to that extent, as long as you have this valuation mindset and counter cyclicality as a thought process in the back of your mind, I think it makes the job a little bit more easier for you to kind of run through these phases of global uncertainties a little bit better and make the journey more smoother.
Right. But when you talk about asset allocation, but you also talk about the valuation part of it, right? It's almost like a bull market that we've been from the last few years. How do you try to time that part, right? Because the bull market obviously has stayed for long. Right. So when you are obviously evaluating all the strategies for this, take us through, like, how do you think?
It is true that we have had our own share of optimism in the marketplace for a while, and that does lead to frauds getting created in multiple pockets. So which is why I kind of go back to the earlier point about being mindful and disciplined about the price that you pay for acquiring assets and securities. So I think our entire thought process is centered around this main point, the main approach, which we say that we want to be, in general, we want to think a little bit counter-cyclically. We don't want to be pro-cyclical in our approach. And pro-cyclicality obviously hurts a lot more when your sentiments are at extreme. Which is what in the recent phase we have seen. I mean, at least while the last 6-8 months have been a little bit more sedate. But prior to that, we did see a kind of euphoric sentiments, and we did see a lot of pockets of froth getting created in the marketplace. So as long as you stick to the entire investment process, and the entire investment approach is extremely rooted in fundamentals, and you kind of and our entire research team kind of is attuned to being thinking about in addition to the outlook for various industries and businesses, they're also very, very attuned to thinking about what price we are paying for the value that we are getting. And that helps in us in kind of bringing that risk management into the entire process of ensuring that we don't kind of make big mistakes in kind of creating our portfolios.
Right. And also, when we talk about these pockets of, finding the next opportunities, right? How do you go about, selecting those sectors or themes that are emerging?
So I think the way we look at opportunities is, of course, very, very business specific, very sector specific. So our approach has always been to be, while we take cognizance of the overall macros, while we take cognizance of the overall headline levels of valuations and things like that, but the approach as far as security selection has always been extremely bottom up. And hence, to that extent, for us, what matters a lot more is how are our sector analysts and our stock analysts thinking about each of these trends impacting their own set of companies that they track, whom they deal with, what level of benefits that can be derived from them, and at the same time, other companies which are taking a lot more risk along the way to kind of fund some of these than what they can probably digest. So I think it becomes very, very stock specific again. I mean, the discussion becomes very stock specific. I mean, we don't run with the thought process that AI is a theme and certain companies talking a lot about AI, and hence it should be a great company to invest in. I mean, we obviously have to go some levels deeper to understand how exactly the business is going to get benefited from this overall theme. And finally, after kind of thinking through all of this and kind of thinking about the outlook of the business, again, we come back to the central point on what price we are paying for that value.
Right.
So you might find a great company where you think that a lot of things are going well for it from an outlook standpoint, but if market is already kind of priced it to perfection, then we would be very skeptical about kind of jumping into that point in time. So we have to be kind of careful on all these aspects before we can incorporate a broader theme into our investment decisions.
All right. Thank you so much for your time. It was great chatting with you.
Thank you. Thanks a lot.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.